So here's ATER, Ethereum. This finishes at $4.65 today. That is down 20.51%.
And it's gone.
Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is MULN, Mullen Automotive. This finishes at $1.41 today. That is down 16.57%. So we've been covering the stock for 2 months now. Crazy timeline for this stock. It was squeezing, then the Hindenburg report came out. Very serious accusations there. The CEO has yet to respond. That's a big red flag. And ever since that report came out, the stock has been tanking. So I did predict that it would pull back down to 180 and 150. A lot of apes didn't like that. Got a lot of hate. But here we are. And I believe this was number 3 on StockTwits today after Netflix and Ethereum. I think this had over 5,000 mentions. So once again, we're going to analyze it. So no company-specific news to justify this price action today. It just seems like the squeeze is over, people taking profits, and shorts coming in here. And just the overall market selling off today, especially tech. So let's go ahead and analyze. So first of all, this appears to be a cup and handle in the making. Bottom of the cup being 52 cents, the low. And there can be multiple possible tops. It can be 380. And if it is 380, that would be a bearish indicator because that would mean the cup already topped out and is due for a pullback, which it is pulling back pretty significantly. But it can also be above 380. And anything above 380 would be a bullish indicator because that would mean the cup is not completed yet. It can also be 585, 640, 740, 815, 905, 995, 1050, 1165, or even the high of 1590. Although I do think the most realistic top is 380. I think it already topped out. So the cup and handle can be bullish or bearish depending on where the top is. But it does appear like in the longer term, it's bullish, and in the shorter term, it's bearish. We do have a double gap down. First gap down at 1190, so that is a bullish indicator. That is telling us that the stock should eventually come back up to 1190 to fill this gap. May take a while, but eventually it should. And then we do have another gap down at 465, so another bullish indicator that is telling us that the stock should eventually come back up to 465 to fill this gap. Again, may take a while, but eventually it should. And in the aftermarket here, this is running up to 149, so that is a bullish indicator for tomorrow. If this holds, that is suggesting that the stock will run to the upside tomorrow. We do have this gap up at 60 cents, so that is a bearish indicator. That is telling us that the stock may come back down to 60 cents to fill this gap. That looked very unlikely a couple days ago, but each day that does look more and more likely. So be aware of that, guys. There also were gaps up at 150 and 180. I predicted those would fill, and they did. And then we do have this symmetrical triangle here. It looked like it was consolidating at 240, and it was either going to break out to the upside or the downside. And unfortunately, it looks like it's breaking out to the downside. So another bearish indicator there. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of 155 and 135. So if this goes to the upside, next levels of resistance would be 155, 170, 190, 225, 255, 270, 290, 320, 340, 360, 380, $4. 410, and then 425. There is resistance above 425, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 135, 115, $1, 75 cents, 60 cents, and then the low of 52 cents. So right now at this current price, 141, the channels to the upside and the downside are pretty decently sized, so expect a normal amount of price action either way this goes. However, if/when this breaks 170 to the upside, the channels start to open up and get pretty wide, so expect a significant increase in price action if/when this breaks 170. And to the downside, if/when this breaks 135, the channels start to open up and get pretty wide, so expect a significant increase in price action if/when this breaks 135. RSI is currently at 35, so not quite oversold and undervalued, but quickly approaching that, so this could be a good buying opportunity coming up, not financial advice. And this did 109 million in volume today. Very significant volume, way above the average of 23 million. So the sell-off today was confirmed by the volume. Okay, guys, just my opinion, not financial advice. So fundamentally, I really don't like this stock. I'm very skeptical about it. The Hindenburg report has very serious accusations, and the CEO has yet to respond to them. That's a huge red flag for me. So just based on the fundamentals, I would stay far away from this stock, until we get some answers at least. So what I'm going to say here is just based on the technicals, not the fundamentals. So long term, this looks like a good buy and hold. Got some pretty strong bullish indicators in the cup and handle and double gap down. In the short term, this has already pulled back pretty significantly, and still looks like there's more downside to go. Looks like a falling knife right now, with really no support in sight just yet. So therefore, if you want to go long, not financial advice, honestly, 141 is really not a bad entry. This is almost in oversold and undervalued territory. That being said, this still looks pretty scary at the moment. Again, looks like a falling knife currently, and I'm very scared about this gap up at 60 cents, which is crazy because when it was at $4, it seemed impossible that it would come back down to 60 cents. But here we are. That is a very real possibility at this point. So, yeah, 141 is not a bad entry. If you want to go for it here, go ahead. But personally, to me, it does appear like it will keep pulling back even further. Don't know how low it's going to go, but this has the potential to go back down to 60 cents to fill the gap. So honestly, I think a better move would be to just hold off for right now, just observe the price action, see when this starts to catch support, and then you want to make your move. You want to try to catch this at the bottom, wherever that may be. So yeah, 141, not a bad entry, but if you're a little patient here, you should be able to get even better. If you can get this back at 60 cents, that'd be a steal, and I think that's a very real possibility. Now, if you want to go short, not financial advice, it's a decent play. You already missed a lot of money on the downside here. You really should have went short at $4, $3, even $2. That being said, there is still more downside potential. Not really the greatest short play here, because 141 isn't exactly the greatest entry, but again, this may come back down to 60 cents to fill the gap. So that is still quite a ways on the downside here. I'm just a little concerned, because this is getting into oversold, undervalued territory. But it looks like it's a falling knife right now, and still more downside to go. So I would say going short here would be a medium risk, high reward play. I say medium risk because this already pulled back so much. This is still a retail favorite, and theoretically can reverse at any time. But again, this may come back down to 60 cents to fill the gap. And if it does, from this current price, 141, that would be about a 60% downside. So it's worth a shot. A little too risky for my liking. I wouldn't go for it, but it can pay off pretty big. So if you want to go short here at 141, go for it. Just please do that at your own risk. And I would say cover at 60 cents, where the gap is. Or wherever it starts to bottom out and catch support. Whichever one comes first. Alright guys, so pretty straightforward. Fundamentally, I don't like the stock. I don't trust it. Very skeptical. But technically, long term, it looks like a good buy and hold. In the short term, looks like it's not done selling off just yet. So if you want to go long, 141, not a bad entry. But if you're a little patient here, you should be able to get even better. And if you want to go short, still a good amount of downside potential. But getting pretty risky at this point. Still worth the shot though. So too risky for my liking, but if you want to go for it, then I can support it. I would just say cover at 60 cents where the gap is, or once this starts to bottom out and catch support, whichever comes first. So, sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is MULN, Mullen Automotive. So here is NFLX, Netflix. This finishes at $226 today. That is down 35.12%. So this was the stock today. Everyone talking about it. Has like 15,000 mentions on StockTwits, #1. So we're going to analyze it. So we did talk about the stock yesterday. That was in the middle of all the chaos. So today things are settling down and we have a better picture of what's going on here. So there were a lot of reasons as to why the stock went down so much. We had earnings, news, and downgrades. So let's check all of that out right now. So the estimate for EPS was $2.92. The actual was $3.53. So that was an EPS beat. Pretty big beat. But revenue was $7.94 billion expected and $7.87 billion actual. So slight miss on the revenue there. So big beat on the EPS, slight revenue miss. However, what was really important was the subscriber growth. That's what people really care about. So they reported that they lost 200,000 subscribers last quarter, which was the first time ever that the company lost subscribers. So that's really not good. And they predict that they're going to lose 2 million more subscribers next quarter. So really bearish news there. The company blames password sharing as one of the big problems. They claim they're going to crack down on password sharing. And they're also blaming the Russia-Ukraine conflict, that they lost a lot of customers because they did back out of Russia. They say that they are considering a cheaper tier with ads, just like all the other competitors. And today we are getting a lot of price downgrades. So let's take a look at that. So Cohen lowers price target to $325. Evercore ISI lowers to $300. Bank of America, $300. Wedbush, $280. Rosenblatt, $245. KGI Securities, $350. Credit Suisse, $350. UBS, $355. And there may have been some other hedge funds in there as well. But pretty much all the major hedge funds cutting their price targets very significantly. So all around, really bad day for Netflix. Earnings themselves weren't that bad, but terrible subscriber news and A lot of price downgrades, a lot of hedge funds pulling their money here. Okay, so let's go ahead and analyze now. So first of all, this is going to be a cup and handle in the making. So this is not done selling off just yet. But very soon here, this should start to bottom out, catch support, and we will develop a bottom. So I'm not going to speculate where the bottom is, but we do have multiple possible tops of the cup. It can be 397, 414, 455, 550, 619, 629, 677, or even the high of 701. So no bottom of the cup just yet, but the cup and handle will be a bullish indicator because that is telling us that the stock should come back up to one of those tops to complete the cup. And then we do have a quadruple gap down. First gap down is at 567, so that's a bullish indicator. That is telling us that the stock should eventually come back up to 567 to fill that gap. May take a while, but eventually it should. Second gap down is at 507, so another bullish indicator. That is telling us that the stock should eventually come back up to 507 to fill that gap. Again, may take a while, but eventually it should. Third gap down is at 377, so another bullish indicator. That is telling us that the stock should eventually come back up to 377 to fill this gap. And then the fourth gap down was formed today at 333. So another bullish indicator that is telling us that the stock should eventually come back up to 333 to fill this gap. So quadruple gap down, you rarely see that. Very strong bullish indicators there. So right now this is sitting on the support of 226, which I finished at today. So if this goes to the upside, next levels of resistance would be 246, 253, 263, 271, 277, 284, 295, 305, 314, 323, 330, 336, 344, 352, 360, 366, 375, 385, 397, and then 414. There is resistance above 414, but we're not going to discuss that right now. And if this goes to the downside, next level of support would be 212. And there is support below 212, but this is literally the 3-year low, so I can't go any lower on the TD charts here. So right now at this current price, 226, the channels to the upside and the downside are very wide. So expect significant price action either way this goes. However, if/when this breaks 479 to the upside, the channels start to narrow. So expect a significant decrease in price action if/when this breaks 479. RSI is currently at 20. So that is extremely oversold, extremely undervalued. So could be a good buying opportunity, not financial advice. And this did 133 million in volume today. Very significant volume. Biggest volume day of the year by far. Way above the average of 5 million. So this sell-off today was confirmed by the volume. Okay guys, just my opinion, not financial advice. And this is pretty obvious. So it's been pretty rough the past couple of months for this stock, but it is Netflix. It is a blue chip value stock. It's not going anywhere. It'll have its day again. So long term, this looks like a good buy and hold. Got some pretty strong bullish indicators, again, in the cup and handle and quadruple gap down. In the short term, this will probably sell off a little bit more, but really shouldn't go too much lower. So therefore, if you want to go long, not financial advice, 226 is already a really good entry. 3-year low, very strong bullish indicators. That being said, I would follow the 3-day rule here, which for everyone who doesn't know, the 3-day rule is when a stock gets wrecked, and it's usually better just to hold off for 3 days, wait for things to settle down before you buy. So, really can't blame you if you want to go long at 226, already a really good entry, but maybe you should hold off for a few more days, let things settle down, and then come in and buy the stock. So I can't support going long at 226 and lower. Really can't go too wrong here. Really excellent entry. Now, if you want to go short, not financial advice, really no point in doing that. I do not see why you would go short here. Again, very strong bullish indicators, cup and handle, quadruple gap down, low RSI, no bearish indicators, and no neutral indicators. This is a 3-year low, really shouldn't go too much lower. So you already missed a chance going short here. You should have went short anywhere in the $700 to $300 range. Here at 226, it's a bit too late going short. You missed your chance. If you go short here, you're probably going to get burned. So not a smart idea. Please don't go short here, guys. So pretty straightforward. Long term, this is still a good buy and hold. Short term, should pull back a little bit more, but really can't go too much lower. So if you want to go long, 226, really great entry. Maybe it'll come down a little bit more. And really no reason to go short here. Bad idea. So sorry to everyone who lost money in the stock today, but looks like a good buying opportunity, not financial advice. And good luck to everyone currently in the stock and to everyone looking to take a position. This is NFLX, Netflix. So here's ATER, Aterian. This finishes at $4.65 today. That is down 20.51%.
And it's gone.
So we've been discussing this stock for a couple of weeks now. This has been the retail favorite. Major price action on the stock today. And I believe it was number 2 on StockTwits. I think it had over 9,000 mentions after Netflix today. So once again, we're going to analyze it. So I've been saying for a couple of days now that this is way overextended and has to pull back at some point. The squeeze can't keep going on forever. A lot of apes didn't like that. Got a lot of hate. But hey, I tell the truth here, guys. And yeah, the last 2 days we are getting some major pullback. It does appear like the squeeze is winding down and coming to an end. But no company-specific news to justify this price action today. Just seems like the squeeze is over. Retail momentum cooling off. People taking profits and shorts coming in here. So let's go ahead and analyze. So first of all, this appears to be a cup and handle in the making. Bottom of the cup being the low of 210. And there can be multiple possible tops. It can be 680. And if it is 680, that would be a bearish indicator because that would mean the cup already topped out and is due for a pullback, which it is pulling back now. But it can also be above 680. And anything above 680 would be a bullish indicator because that would mean the cup is not completed yet. It can also be 835, 995, 1190, 1420, 1705, or 1905. And actually longer term, this is an even bigger cup and handle, and this has the potential to come back up to 49 long term. Although personally, I do think this did top out at 680. I do think that's the most realistic top. But the cup and handle can be bullish or bearish depending on where the top is. It seems like longer term, it's a bullish indicator, and short term, it looks like it's bearish. This does appear to be a bull flag developing here. I drew it for you guys. Here's the flag pull, and here's the flag developing. So that would be a bullish indicator. That is suggesting that the stock may break out to the upside. We do have a gap down back at 850, so that is a bullish indicator. That is telling us that the stock should come back up to 850 eventually to fill this gap. May take a while, but eventually it should. And then we do have a gap up at 390. So that is a bearish indicator. That is telling us that the stock should eventually come back down to 390 to fill this gap. And on the MACD, the moving average convergence divergence, it looks like it's starting to reverse. So that is a bearish indicator. That is telling us that it might be time to sell soon when the lines cross. And in the aftermarket here, this is pulling back down to 460. So if this holds, that would be a bearish indicator for tomorrow. That is suggesting that tomorrow the stock will sell off as well. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of 510 and 460. So if this goes to the upside, next levels of resistance would be 510, 565, 610, 640, 680, 745, $8, 835, 865, 910, 955, 995, and then 1045. There is resistance above 1045, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 460, 410, 355, 305, 255, 210, and then 140. So right now at this current price, 465, the channels to the upside and the downside are very wide, so expect significant price action either way this goes. RSI is currently at 56, so no longer in overbought and overvalued territory, but still a little bit above average. So according to the RSI, this current price of 465 should be a little bit lower, and this did 41 million in volume today. Very significant volume, way above the average of 8.5 million. So the sell-off today was confirmed by the volume, although the volume is pulling back from the past few days. So it does appear like the squeeze is coming to an end. Okay guys, just my opinion, not financial advice. So it does appear like this did top out at 680. That's a possible top of the cup. Very strong resistance there, couldn't break it. It appears like the squeeze is over and the stock is starting to dump, as with every short squeeze. I may be wrong, but that's what it looks like based on the chart here. So longer term, this looks like a good stock to buy and hold. Got some pretty strong bullish indicators in the cup and handle and gap down. In the short term though, this already pulled back a lot, but it does appear like there is still more downside to go. So therefore, if you want to go long, not financial advice, I would not do that. This appears to be a falling knife at the moment. Very strong negative momentum. It does not appear like it's done selling off just yet. So based on the cup and handle here, if the top is 680 and the bottom is 210, this should pull back to around 445 to form the handle. Handle is forming right now because it's halfway between the top and bottom of the cup. And again, we do have a gap up at 390 where the gap is. So that should eventually fill. So I do think this will pull back in the 445 to 390 range. I would say going long here would be a medium risk, low reward play. I say that because there is a good amount of downside potential here, about 15 to 20% on the downside, back down to 390. And it does appear like the squeeze is over and really shouldn't go that much to the upside anytime soon. So just not really worth it in my opinion. Don't really think going along here is the greatest idea. So I don't like the entry of 465. Still appears like there's downside to go. I would set your buy orders to 390, where the gap is. And if it pulls back below 390, then you can just average down at the supports that I mentioned before. Now, if you want to go short, not financial advice, seems like a pretty decent play. You already missed 2 fat red days. But again, I do think this will pull back down to 390 to fill the gap. And from the current price of 465, that is around a 15 to 20% downside. So still pretty decent money to be made here. I would say going short here would be a low risk, medium reward play. Again, because I don't think this is going to go mooning to the upside anytime soon. Looks like the squeeze is over. So this should be a relatively easy 15 to 20% downside gain here. So although you already missed a lot of tendies, a lot of money on the downside already, there's still money to be made. So I would support going short at 465 and higher, and I would cover once this comes back down to 390 to fill the gap. So pretty straightforward here, guys. Long term looks like a good buy and hold, but in the short term looks like the squeeze is over. Pulling back really hard. Falling knife right now. Still has more downside to go. So I don't think going long is the greatest idea right now. I would hold off, wait for a better price. And if you want to go short, you already missed 2 big red days, but still downside potential. So still seems like a pretty decent play. So sorry to everyone who lost money in the stock today. And good luck to everyone currently in the stock and to everyone looking to take a position. This is ATER, Aterian. Thanks everyone for watching today. I appreciate you guys. Please like the video. Please subscribe. And catch me every weekday after market close on The Smarter Gambling Show. You apes already know. Diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.